Hey, what's going on everyone? Welcome back to another passive income investing video. My name's Griffin, and in today's video, we're gonna be looking at a variety of different exchange traded funds, or ETFs for short, that you can purchase and hold in your investment portfolio as of today. I personally hold a variety of different ETFs in my investment portfolio, mainly due to the fact that I like the exposure to different industries that ETFs provide, as well as the diversification that naturally come with them. Now, the ETFs that we're gonna be covering in today's video are just a handful of exchange traded funds that I personally like based on criteria that we'll be covering. However, do remember that there are dozens of ETFs that you can trade in your investment accounts, so make sure to do your own research and due diligence and consider which ones are right for you before going out and purchasing any. If you want to know more about the fundamentals of ETFs, then check out my ETF Investing for Beginner video right here, where we go over how an ETF works, why I like to invest in ETFs, and why you should consider holding some in your portfolio. And by the way, if at any point in this video it's giving you some value, then make sure to give it a thumbs up. It really helps me out and helps the channel grow, because YouTube's algorithm really favors videos that have a lot of watch time and have a lot of likes. So if you enjoy this video, give it a like. All right, so for each ETFs that we're gonna cover in today's video, we're first gonna go over the fund itself, including its basic characteristics and primary goal. Then we're gonna take a look at the specific top holdings within the fund and the average growth of $10,000 over the last 10 years. If you're new to investing and aren't entirely aware of what an ETF is, it's essentially a basket of securities that tracks an underlying index. So ETFs can contain many types of investments, including, say, growth stocks, blue chip stocks, dividend stocks, commodities, bonds, or even a mixture of different investment types. And actually, most ETFs will track an index with a specific purpose, such as, say, a bond ETF, a certain industry ETF, a commodity ETF, and there are a variety of others. Now, you might be wondering here, well, this sounds a heck of a lot like a mutual fund, and you aren't entirely wrong in thinking this, but there are some primary differences. The main difference between an ETF and a mutual fund, among other things, is that an ETF is traded on an exchange in the same manner as, say, a regular stock, how that is traded. You can buy and trade stocks on an exchange during the day. Therefore, ETF share prices do fluctuate throughout the day as the ETF is bought and sold, which is different from mutual funds that only trade once per day after the markets close. ETFs can also hold hundreds or even thousands of different assets, as we're going to cover later on in this video, and that's really the reason why they offer tremendous diversification while only holding one single ETF. All right, so the first ETF we're gonna be looking at today has the ticker VFV, and it's an ETF that is offered by the company Vanguard Investments. It's also an ETF that I have covered in some previous videos, and that is really due to the fact that it's a solid ETF that shows consistent gains and has a low management fee. So VFV is an S&P 500 index ETF that tracks the performance of a broad US equity index that measures the investment return of large cap American stocks. So as the title would suggest, the S&P 500 is the Standard & Poor's 500 index that is a market-weighted index of the 500 largest US publicly traded companies. Now, do keep in mind that even though the fund is comprised of US equities, though, this is a Canadian ETF that trades on the Toronto Stock Exchange in Canadian dollars, so you really don't need to convert any of your Canadian dollars into USD. You can fund your trading account with Canadian dollars and you're good to go to purchase some shares of VFV. So if we take a look at the fund's basic information, we can start with the management fee, which is 0.08%, which is extremely low. This is really due to the nature of what this fund actually represents, which is the S&P 500, as we just covered. And this isn't necessarily a complex thing to replicate, and therefore Vanguard doesn't need to take a huge management fee. They would rather just reinvest that into the fund and distribute that over to shareholders. The fund currently holds $2.4 billion in net assets and has a 12-month trailing yield of 1.63%. So this means that on average, if you were to buy one share at the current price of $63.34, you would get a yearly dividend payout of about $1.16, which is distributed on a quarterly basis. Now, if we take a look now at the current holdings of VFV, we can see that it is pretty evident that this is an index fund tracking the S&P 500 because all of the top holdings are large American blue chip stocks such as Microsoft, Apple, Amazon, Alphabet, Facebook, and a variety of others. And one thing that's interesting to note here is that the top 10 holdings in VFV equate to about 23% of the overall net assets. So if we were to take a deeper dive, however, into this in the portfolio data tab, we can see that there are 509 holdings in the fund. Case in point, the S&P 500. The PE ratio is 20.4. And then if we take a look at the holding details, we're not really going to go in depth here due to the length of today's video, but if you want to know more about this, I'll leave a link down in the description. But the market value of the shares held for Microsoft Corp in VFV are about $100 million US, followed by Apple at just shy of $90 million, holding 319,000 shares. Another interesting thing to look at here is the sector weighting, so percent of equities based on the different sectors that are held within this fund. So the information technology sector represents about 22% of the fund. The healthcare represents about 13.7%, followed by the financials industry at 13.2% of the fund. So once again, if you want to know more about this, I'm going to leave a link down in the description where you can check it out for yourself. And finally, let's take a look at the growth of $10,000 since 2014, which was the inception of this fund. So if you were to invest $10,000 into VFV back in 2014, you would now have a current market value of about $20,500. But do keep in mind here that this was during the entire time of a bull run. So VFV hasn't even been around long enough to see a bear market. However, this does still show that it's a solid fund and it's comprised of stable and sturdy companies. So overall, VFV is a great ETF to hold in your portfolio for both long-term growth, and it does pay decently good dividends. So I would hold this in my portfolio, which I do. The next ETF that we're going to be looking at today is one that I am quite a fan of, and it is the iShares S&P TSX 60 Index ETF, known as the ticker symbol XIU. This is an ETF that was created and is managed by the financial services company BlackRock, and its main investment objective is to seek the long-term growth by replicating the performance of the S&P TSX 60 Index net of expenses. So basically what this means is it's a fund that seeks to track the stock market index of the 60 largest companies listed on the Toronto Stock Exchange. So by owning this ETF, you'll be exposed to the largest established companies in Canada. If we take a look at the performance of this ETF, we can see that since inception, there has been an average annualized return of roughly 7.2% annually, for a total cumulative return over the last 10 years of 97.29%. A couple other interesting facts about this fund include the fact that the net assets are roughly $8.8 billion. The rebalancing is done on a quarterly basis, and as the name of the fund would suggest, there are 60 holdings currently in the fund. When it comes to the dividend earnings that you can come to expect when investing in this fund, the current distribution yield is 2.92%, which is relatively high for a fund that is not dividend specific. But the reason for this is that it is invested heavily in the Canadian bank industry, which pays high dividends. The management fee for this fund is 0.15%, which is higher than VFV as we covered earlier, but is still extremely low compared to any mutual fund. And for the exposure that you're getting to the Canadian market, I think that 0.15% is very fair, considering that you don't even have to worry about rebalancing or purchasing any individual stocks. Now, if we take a look at the holdings held within this ETF, as I mentioned earlier, you can see that the financial sector is heavily weighted in this fund. The first one being Royal Bank of Canada, or RBC, at a weight of 8.09% for a market value of $722 billion. This is followed by the Toronto Dominion Bank, Bank of Nova Scotia, Bank of Montreal, Brookfield Asset Management, and a variety of other bank stocks. We also have a couple stocks such as Enbridge Incorporated that is in the energy sector. I know for a fact that Enbridge pays a dividend of roughly 6.5%, so that will definitely have an impact on the higher dividend yield that we see here. But as a matter of fact, pretty much every one of these companies here pays a high dividend. When it comes to the exposure breakdown, as I said earlier, we can see that the financial sector represents about 35.4% market value of this fund, followed by energy at 17.88%, and a variety of other sectors. So once again, I'm going to be leaving a link down below where you can come straight to this page to do some more research for yourself. But overall, XIU is a great ETF that you can hold in your portfolio. All right, the last ETF we're going to be looking at today is once again from BlackRock, and it's called the iShares S&P TSX Capped REIT Index ETF, also known under the ticker symbol XRE. Now, I've never talked about REITs on my channel, but what it is a real estate investment trust, hence REIT, which is a company that owns and in cases operates income producing real estate. So REITs can own many different types of commercial real estate, such as office and apartment buildings, warehouses, hospitals, shopping centers, hotels, and a variety of other forms of real estate. REITs trade on stock exchanges, and for that reason, you can buy and sell them like stocks or ETFs. And in the case of XRE, this is actually an ETF comprised of a basket of REITs. So now back to XRE, the main investment objective of this fund is to provide long-term capital growth by replicating the performance of the S&P TSX Capped REIT Index, and this gives you exposure to a wide variety of Canadian REITs. This ETF also pays out monthly dividends, as you can see here, at a yield of 3.94%, which is really high, and we'll talk about that really shortly as to why that is. But if we take a look at the performance here, the average annual performance over the past year, if you were invested over the past year, is about 14%. And then over the last 10 years, it was about 12.54% annually, for a cumulative performance, a total return of about 225% over the last 10 years, or even 415% since inception, which is truly remarkable. For example, if we were to take a look at the chart of the growth of hypothetical $10,000, if you were invested for the last 5 years, your $10,000 would have taken somewhat of a dip around 2015, but would now be worth about $15,000 in today's value. A couple key facts here: the net assets of the fund are around $1.4 billion. It exchanged on the TSX, so once again, you can use CAD to purchase this. And the number of holdings, there are 19 holdings, and the price is currently $19.50. When it comes to fees, however, they are somewhat higher than VFV and XIU, as we saw earlier. This one comes in at 0.55% management fee, which, guys, once again, isn't even that much. It is for an ETF. It's a much higher management fee than most. However, keep in mind here that a mutual fund would be around 2% management fee, and this here is going to expose you to a variety of different REITs. You're going to get a 3.94% distribution currently, and you're holding a wide variety of REITs that hold great Canadian real estate. So let's actually take a look at some of these holdings here. Most of them aren't going to make sense for most of you if you're not aware of what REITs are, but essentially they are all just companies who invest in real estate here. So for the first one being Canadian Apartment Properties Real Estate at around 14% weight for this fund. One that I really like is Allied Properties Real Estate Investment. They pay out a dividend, I'm pretty sure, of about 4%, if I remember correctly. And pretty much every one of these REITs pays out a good dividend. That is why if you hold XRE, you're gonna get a dividend of 3.94% paid out monthly. Now finally, let's look at the exposure breakdown of this ETF. And because they're all gonna be REITs, they're all real estate, but these are just different types of REITs. So retail REITs, residential, so actual housing. This is gonna be more like shopping centers and commercial real estate. Diversified REITs, offices, industrial, healthcare. And finally, about 0.1% is held in cash and derivatives. So once again, if you want to know more about this REIT, I'm going to leave a link down in the description where you can find out more.